Welcome back. Now it's time for Forum Daily's weekly market update with Catherine Murray, host of the Buck Stops Here. Take it away, Catherine.
Thanks, Nima. Hello, everyone, and welcome to our weekly market recap. I'm Catherine Murray. Well, what a week it has been. We saw a major move higher in the broader indices Monday and Tuesday of this week, up by about 5% across the board. You actually saw about 1,500 point gain on the Dow. Really a major rebound, the largest we've seen, 2-day rebound that is since April of 2020. And it does follow 5 weeks of decline. So interesting to note that we've got this major rebound again following some significant declines over the past number of weeks. Now, why did this happen? Well, the move was really driven by many market participants concluding that the US Federal Reserve has been so aggressive in raising rates that they're going to bring the economy to a breaking point. That's the word you're going to be hearing in the news, that we are close to a breaking point. At which point, investors are saying, look, they're going to have to put the brakes on. They cannot continue to do this. People cannot afford higher rates on variable mortgages. Governments and corporations also can't afford to pay higher interest payments on the debt that they've been accumulating since the financial crisis. That's just part of the problem. So, the market, of course, is a forward looking mechanism and is starting to price in the potential that the US Federal Reserve might actually put the brakes on their rate hike and tightening the financial system. Having said that, though, there was actually little follow through in the market on Wednesday. That's as investors recognize that the Fed really has not changed their narrative at all. You've got 30-year mortgage rates at a 16-year high. So, kind of the fixed income market's also telling you, hey, we're not too sure that the Federal Reserve is going to pull back there. There's also, of course, concern that there's been a lot of damage that's already been done in the broader fundamental economic outlook for the United States as well as Canada. You've got some of the most recent economic data, such as manufacturing and services PMI, coming in lower than expected. Initial jobless claims in the United States also higher than expected. Fear that earnings will have to come down, and we'll probably hear more about corporate layoffs. So that's probably why we didn't have much of a follow through. Stepping back, there's two key events that you need to know about this week. One that triggered so much volatility in the market. One was the UK government's expansionary monetary policy um, having to be pulled back. It caused a lot of consternation within the markets, given the fact that they want to expand at a time when inflation is so high. They had to walk that back, and the BOE, the Bank of England, actually had to step in and support their currency. The other key event that was swirling around over the weekend that got put aside, which I find quite interesting by the market, is Credit Suisse. There was concern, or maybe still is, that they have some financial stability issues. They, of course, have denied the fact that they were out talking to large investors to raise funds. But nonetheless, the cost of insuring Credit Suisse bonds did climb to 15%, saying that there is concern about their balance sheet. Those are levels, the cost to insure their bonds, that we've not seen since 2009. Those are two key global events that aren't front and center right now. What's front and center is the US Federal Reserve and whether or not they're going to cause a breaking point, but do keep those in mind. Now, in terms of market moves, as I mentioned, we did see the equity markets finish lower on Wednesday. We really didn't get to see that follow through from the strength on Monday, Tuesday. I don't think that's too worrisome. Quite typical, in fact. WTI has been up by about 10% over the past 3 days. Big news here as it relates to the energy sector. OPEC Plus decided on a big production target cut, slashing output by 2 million barrels per day. Reports that Russia and Saudi wanted to support the oil price. President Biden said that he's disappointed with the decision and is calling on U.S. energy companies to bring oil prices down. But oil prices are a function of supply and demand. So I don't think it's as easy as that. Away from that, from a stock perspective, the other big news in stocks this week, of course, is Twitter. Elon Musk did submit a letter on Monday that he intends to go through with the initial the deal to buy Twitter shares at $54.20. That could go through by the end of this week. It's seen as somewhat surprising, just given all the criticism he's had surrounding Twitter and their user data. But questions do remain. How much Tesla shares does he have to sell? What major management changes will he make? What will Twitter look like 3 years out? And it is expected he'll bring it back to the market. As it relates to the TSX, just a couple stories here. Real estate is front and center. We are seeing the cooling effects. Toronto listings hit a 20-year low. We're seeing telcos and real estate trade a little bit lower. and do expect that the BOC will continue to raise rates by about 50 basis points on October 26th. That does it for me. Nima, back to you.
All right, thanks for that, Catherine. Again, that was Catherine Murray, host of the Buck Stops Here, airing Sunday mornings at 9 a.m. Eastern only on the News Forum Network.